Guys, welcome to another episode. I'm your host, Evantz Saint-Gerard. I'm here with Donald Sharpe. Donald, the reason that we're doing these videos is basically we want to make sure that people understand, for those who are on the fence and they want to purchase a home, but they don't know where to start, maybe the conventional programs that are out there might not be for them. We want to show them there's other options out there that are available to them. So, Donald, basically, what's the program that you want to talk about today?
Well, I want to talk about, particularly for New York State, the New York State Mortgage Agency loans, which are sponsored by the state itself. They're subsidized loans for people within specific income brackets that are first-time buyers. So the definition of a first-time buyer for this program is anyone that has not owned any real estate for the last 3 years. They could be previous homeowners a while back. Participants in this are true first-time buyers, and it's for people that are buying within their price range and whatnot, according to their income on several income levels. So they are described as, there's 2 tiers. So the tier 1 is the lowest. The lower of the 2 tiers gets a better interest rate than the higher of the 2 tiers. Both tiers will get a reduced interest rate that's lower than the market rate at any given time, and it's published on the state's website, and it's clearly lower than the rest of the market, and they never have any points. They can't have points, they can't buy the loan down or anything either. So
Donald, for the people who don't understand what points are, could you explain what that is?
Good point. Points are fees, meaning a point equals 1% of the loan amount as a fee to produce the loan at a particular interest rate. So there might be, for example, right now in this state program, the lower tier gets an interest rate of 6.125% with no points. So it just means there's no extra fees to get to that rate. For 0 points and 6.75 for 1 point, means you pay extra fee and it will permanently buy you a lower interest rate.
Okay.
That said, so the interest rates on these at the present time are 2 tiers. So one is 6.125%. The second one is 6.75%. So it means that tier 1 is a buyer that is earning in the household less than $128,000. Tier 2 is $169,000. You know what? I'm sorry. I take that back. It was adjusted to $135,000. Tier 1 is 135, not 128.
At the time of this recording.
Yes, they do adjust them every so many months sometimes. So, if the household happens to have a child or three persons at all, then the income limit jumps to $197,000. So what we're seeing is people within this specific income level are buying homes. A lot of them are buying co-ops, let's say, that they can qualify for the co-op board, and they already basically qualify for the loan. It isn't that the loan is necessarily making them qualify, but they also at the same time don't have any idea it even exists to take advantage of it, because there's a very poor job by the state of marketing this program. So it's up to us lenders that are qualified to do these loans, to promote it.
That's one of the reasons why we're putting these videos together, to let people know there are other options out there. So they have to do their homework just like we're doing our homework.
Yeah.
So we educate the public.
I think this is a very good tool for people that might be on the fence or can't quite decide what they really want to do and so forth, because all they know is what the norm is. There also happens to be this alternative if they happen to fit in the category within these income brackets. And so people can get a lower interest rate than they think. And on top of that, one of the other major attributes of these loans is that they get forgivable down payment assistance grants. Now, so that means that generally speaking, they're between $15,000 and $30,000 per loan. There's a criteria they have to meet according to establish exactly how much it is.
They have to qualify.
They basically to some degree can't just have $1 million and also still get $30,000. They would still pretty much always get the 15, no matter how wealthy they are.
Okay.
So the thing is, on one hand, these loans are structured or originally created for people that are extremely low on down payment and don't actually have down payment funds, or only have like 1% down or whatnot. And the general idea was to help people with the down payment that might be buying, let's say, a $300,000 home. They barely have any down payment money, but this $30,000 grant is 10%, right? And
Okay.
so they would get 10% down in that particular case. Now, the on the other hand, many of the buyers that we deal with, particularly that are buying co-ops, can't be low on down payment funds. They need to have enough of their own down payment funds in order to qualify for a co-op board. And so it's not just the loan that we're dealing with, it's the building. So the building may require that they already have enough down payment and that they aren't getting extra assistance to buy the property. Now, in which case, we are giving them the money over and above what they were putting down. So if they're buying a co-op where the mandatory rule is 20% down, then they would be putting their own 20% down, and we would give them another $15,000. So most of the time too, when we do this, the first 6,000 or so goes to pay all their closing costs, including their attorney fee, and the other 9,000 or so reduces the loan balance. So
Mm-hmm.
now their loan balance is a little bit lower, and the monthly payment is established based on that. Another thing too is, so this forgivable grant system is it's meant to promote homeownership for people that are going to stay for some period of time, but it's forgivable entirely over 10 years. It is forgivable in equal installments for 120 months, which is 10 years. So every single month, the balance of this loan goes down to zero. There is no payment and there's no interest ever. No matter what happens, they never make a payment. If they were to live in the home for 5 years and move or sell the home, half of the balance of this grant would be sitting there. In the payoff balance, it will be built in. And so they don't have to come out of pocket in that case if they're paying off before the grant was 100% forgiven. But it's important that people understand how the grant system actually works. Question on that?
Yeah, I do have a question. Number one, what is the name of the program? Number two, how does somebody qualify for this program? And the third one, how does somebody reach you basically if they want to know more about this program? So let's
Okay.
start with number one, the name.
Its nickname is Sonymya. It's SONMYA. And so it means the State of New York Mortgage Agency.
Okay.
And so it's not an actual mortgage company. I work with Movement Mortgage, and I can provide my contact information and so forth for anybody that would like to contact me. Very few lenders actually carry this product, by the way. The state has to approve the lenders individually, and we have to go through a ton of training constantly.
Mm-hmm.
But the loan is called a Sonymya loan, and I don't know which way you'd like me to provide the contact information and whatnot for.
Well, you just give them your phone number and how they can reach you if there's a website.
The simplest way, here's the easiest way that we prefer to do this. I have the borrowers email me asking for any information about this whatsoever, because we have a pre-set up set of questions that we're going to ask them in an email that we keep in their file. And so my email address is, my name is Donald Sharpe, SHARPE. The email address is donald.sharpe@movement.com. My phone number is 917-941-7355. However, unfortunately, when people call me, I simply have to tell them I have to email them this form anyway. And so if they can email me that in the first place, one of us on our team is going to immediately get back to them with a short little questionnaire to screen them for whether they qualify for this loan, and if in fact, which version of the loan they would get.
All right. Could you give us a little rundown of basically how people can qualify, what the requirements are?
Yes, it's just that they just need to know that they are either true first-time buyers, never having owned a home, or not owning a home in the last 3 years, how many people are in their household, and that the household income limit that they currently earn is within the two levels, the two current levels, which is $135,000 or $169,000. Again, and in the second level, if they have a child or if it's a 3-person or more household, the income limit is raised to $197,000. So any first-time buyers that make within this bracket, a majority of them are 169 and under, and that are out shopping for a co-op or house or whatever that is within their means. It's not going to make them qualify for something way over their limit or budget or anything. But that's the primary thing. It can have variable credit. It doesn't require super high credit. It has a credit score down as low as 640. And again, technically, they can have very little of their own money to qualify if they are buying a condo or a single family house. The loan does go up to 97%, and it's the same interest rate, whether it's 97% or 20% down or anything.
Okay. Again, can you give us your contact information for anybody who's interested in finding more about this product?
Yes. I work for Movement Mortgage. My name is Donald E. Sharpe. My best contact information is my email address, donald.sharpe@movement.com. And my last name is Sharpe.
All right, Donna, I appreciate your time to give us this information. And the whole point of these videos is to make sure that people are aware of what is available out there. You might be thinking, hey, I can't buy the house. Now is not the time, but there are options out there for you. All you have to do is ask the right people, and they'll guide you in the right direction, and you make the best decision for you and your family. With that being said, I'm Evantz Saint-Gerard, your trusted real estate agent here in Queens, Long Island, Brooklyn, and the Bronx. I'm from Brooklyn. I don't understand why I said the Brooklyn, but all those areas. I work in all those areas. If I can't show it to you, somebody on my team can show it to you. And then Donald is always here basically to answer your mortgage questions. And that's all the time that we have right now. So if you have any questions, feel free to reach out to either one of us. And if you found any value in this, feel free to share this with your friends, your family, anybody who needs to hear this information. With that being said, thank you so much. Thanks for